Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hey everybody, welcome to today's market recap and next day analysis. Let's get right into it because I've been absolutely exhausted. So, with that said, all right, we have broken from our consolidation channel here. Okay, now there's this big blue line cutting through the screen. I'll explain that in just a few minutes here. But with that said, we had a major support at the 765.86, and you could see for a large chunk of the day, we were trading around that. All right, let me go ahead and change that. We were trading around that and we started to lose that level. Okay, now the market is starting to head towards the daily 20 mile. Now I want to hide the drawings here and pull up the moving averages. And you can see this very clearly. You know, this is something we've been talking about over the last, I don't know, week, week and a half, something like that. That if we start losing the 5-day moving average, the 10-day moving average, we will be heading towards that 20-day moving average. Now, we did not hit that level today. Okay, that level is currently at the 760.99. Tomorrow it'll be slightly above that 761. Okay, because of where the market closed and where the market's at. So it's extremely likely that throughout the majority of tomorrow that we're going to be trading around that level. There is a little bit more I want to show though, because this doesn't tell the full story, okay? And with that said, the important thing that we need to look at today is that the moving averages are starting to cross into somewhat bullish or somewhat bearish territory. We have the 5 mile crossing underneath the 10 mile. That's kind of the first step to any bearishness, okay? Is that we're losing the 5-day moving average. It's crossing underneath where the market's been trading over the last 10 days essentially. We're heading towards that 20 mile. And from there, if we don't have a major bounce, then look at this yellow line. That's the 50-day moving average. We're very close to pulling to that level and getting ready to potentially head underneath that. Now we're still a little bit of ways from that, so we're not going to jump the gun, you know, way too early on that. We still have quite a bit of support to push through before we start really looking at that 50-day moving average. And this is the 1 hour time frame here, which you can kind of see what those blue lines are alluding to. However, we have pretty much nothing but major supports to start looking at. Now, we did talk about how if we lost this consolidation channel, if we broke through again the 5-day, 10-day moving average, that it's pretty much a waterfall underneath us, right? We pretty much don't have anything underneath us until the 20-day moving average and the 758.11 support, okay? And that still remains true. Even with the 20-day moving average being around that 761, you know, with some change, then the upper bounds of the 20-day moving average will be around that 763. The lower bounds will be around that 759. Okay, well, what coincides with the 759? This 758.11 support. So this is going to be a very crucial range if we are going to have a full 20-day moving average test and start pushing underneath that. This support's really going to sort of dictate quite a bit of what's going on right now. This will really dictate if, really quick, I want to swap to the 4 hour time frame, if we're going to see this consolidation channel expand, because we absolutely can see this entire range right here turn into consolidation. Okay, and I think that's very reasonable at this point of the market. Um, so we would see that consolidation level expand to that support and start trading in between those levels. However, and a big however, is that we have been forming this selling channel. Now, I didn't want to start drawing this out until we really broke through the consolidation channel, but now that we do have enough supports and resistances to start saying that, yes, there is a selling channel formed here. And if you all remember from, a few weeks back about almost a month back, we had a very, very large selling channel forming in here where it was starting to head down and getting ready to really have that major leg down before we got the news that we got that caused this massive rally. Okay, so with that said, um, we're at the top of this selling channel still. And if this selling channel is going to hold strong, which we see multiple different resistances telling us that it's going to, we have three different resistances telling us that that's kind of the top. We have, you know, three different supports telling us that this is kind of the bottom of the channel. So this should be that selling channel, which means that we should be trading essentially from the top of the channel to the bottom of the channel to the top of the channel to the bottom of the channel. And where does that start leading us? Okay, in the grand scheme, this starts leading us towards this 726. Okay, and this is a very, very crucial level that we were talking about for basically a month. Um, well more than a month. Okay, is that was going to be a very, very crucial level. And potentially we're starting to see that, yes, the market can start heading back towards that range. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. So basically, where do we go from here? We've kind of alluded to what we should be expecting over the next couple sessions. But from this, I'm really having my eyes on that 758. Um, if we don't push down to that 758, I think it'd be kind of, absurd. However, this is the market. The market can kind of throw anything in our face that it wants. And so we need to target some of these upward support or some of these upward resistances as well. And we're going to go ahead and delete this support now because it's not necessary. But we still have that resistance at the 768.15. We still have the resistance at the 772. And we're not going to worry about too much above that at the current moment. Unless we get some major news driven narrative, then we shouldn't be pushing too much farther upward at this point. Now, one thing that I do want to show, and I want to hide the drawings here, go back to the daily time frame, and I want to hide the Bollingers actually, is that the 5-day moving average is at the 769.62 currently. With today's close at the 762.60, we should be seeing that level pulled down, probably to about that 767 with some change. And is that within our selling channel currently? Let's see here. Yeah, absolutely. It's definitely within the selling channel, especially for tomorrow. So if we are going to have that 5-day moving average retest tomorrow, that's very much within the bounds of what we should be expecting. And we also have the bottom of this consolidation channel currently. The bottom of this consolidation, if I could talk, consolidation channel acted as a support previously. Now it should be acting as a resistance. Okay, so very likely if we are going to see that upward push, use that bottom of the channel, use the 5-day moving average, and start positioning very, very likely for that downside from there. Okay, but I do think that very likely tomorrow or even by Monday next week, we should be seeing the 758 pushed. And from that 758 pushed, we have a full another elevator downward. Okay, and we've been talking about some of these elevators where because of how this rally worked, there was not a lot of support retested. Okay, and I've looked on this at the 5-minute time frame. There's no supports in here other than the 758.11 and the 748.80. Okay, which is, roughly a whole $9 range, $10 range in between that. So if we're going to start really selling downward, there's a lot of room to start selling downward towards. Okay, now one thing that coincides with this support, the 748.80, again, is that 50-day moving average. It's at it's located at the 750. So if we're starting to see the market really breaking down here again, because for all we know, this could have just been a very quick narrative driven rally where basically it acts like a fair value gap. And because it's a fair value gap, we push the upside. Now we're basically going to elevator down to the downside. And the reason for that, using fair value gaps, is that the market was previously trading, and I'm going to go to the 4-hour time frame here, back towards the 720, starting to head towards the 719 range. Okay. Um, with that rally, obviously it pushed us upward. It pushed us above all previous resistances and supports. But now on the downside, all we have to target is a lot of the previous supports. And again, with the rally, there wasn't a lot of support built in between these ranges, which means that the downside moves are going to be very, very adverse and very large. Okay, so with that said, thank you all for watching. I appreciate each and every one of you. I hope you have a safe trading day tomorrow. Take care, everybody, and thank you so much. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.